Thank you very much for your questions. They have arrived. Meanwhile, let's start from those that specifically relate to our results. There's a handful of questions relating to NII. Let me read these out. Is it reasonable to expect NII to go down from Q1 levels as deposit rates increase? Or are you planning to increase your bond portfolio further? This is the first question. There's similar questions about the outlook for NII and NIM in the following months. Yes, I think these are main questions. There's also a level of deposit beta in the first quarter. What level of deposits pricing do you expect in 2023? How do you see the competition evolving in the segment? And the other question is about pretty much the same. So it's outlook for NII, NIM, deposit pricing, competition, and deposit beta, sensitivity of it.
So I will start and then maybe Fernando can complement. At the moment, of course, the deposit business is profitable, and this means that we would keep increasing the volumes on time deposits and savings accounts and all the total deposits volumes as much as possible. The production of mortgage in Poland, due to the very unstable and unpredictable legal structure that we have at the moment, not only in Swiss francs, but also the way that the change from WIBOR to WIRON is going to happen and future legal risks that we can have in this product, made that all the banks are selling mortgage in a very prudent way, and today we are having a production that is 50% of the previous year. And it's very difficult to forecast any development in this area. So it means that we will keep growing in deposits, and of course we will allocate these deposits between bonds, securities, National Bank of Poland bills, and all of these kinds of instruments. There was the worst part in terms of pricing of time deposits. I would say it was the last year, the end of the last year, when there was the normal, I would say, war for deposits of the end of the year, and already some expectations of the decrease of the interest rates embedded in the yield curve. Now we are already in a situation of some slowdown. We see that today the top offers are already below the levels of the end of the last year, and we are forecasting a calm down. We saw some window dressing and some competition in the beginning of April, with of course some banks trying to increase their volumes for the quarter presentations, but we believe that now we are in a more stable environment, and we are not forecasting a bigger competition on this market. But of course also the ride of improving the net interest income based on the increase of the interest rates is over, and today and going forward the net interest income will improve, mainly based by volumes and proper pricing of these instruments. It's also important to understand that there was a change of the mix. When we were in environments of interest rates zero, there was a huge increase of the current accounts, and the customers were not placing their liquidity in any instrument, savings accounts or time deposits. And as we said, the movement of the increase of the interest rates, there was this change of the mix. So it was not just the cost of the deposits, but also, very important, the change of the mix. We believe that the mix now is stabilized. The mix is very close to what used to be before the rate cuts of COVID times. And so we, as I said, we are forecasting stable environment, stable prices, and future growth of NII based on volumes.
And to complement, so as you see on page 9 of the presentation, in terms of the dynamics of the average remuneration from loans and average cost of the deposits, it is visible that in the first quarter the increase on the average remuneration of the deposits was already much smaller than between the third and the fourth quarter and between the second and the third. So there is a clear sign of this stabilization. Also, the cost of the deposits in a specific quarter depends on the pricing decisions taken on the previous period. So it's sometimes there's always a lag between what we are actually doing and how it is translated into the NII and margin of the bank. So this already end of the peak, let's say, of this offers in the market also later tends to translate into some decrease in the average cost of the deposits. And so we in terms of expectations, we will tend to be marginally up or down in terms of NIM in the nearest future, but still the picture for now is a little bit better than even we had anticipated 3 months ago, we must say, in terms of the NII and the NIM. Regarding I think there was another question also regarding if we have plans to increase the bond portfolio further. We have a significant bond portfolio, which in fact has been increasing during the recent quarters due to the excess of the liquidity. The portfolio is, we have one part that is decreasing, which is in this hold to collect and sell, and this part is going to continue to decrease, and another part in hold to collect portfolio. And so, but the increase or decrease of the bond portfolio is more a consequence of the bigger or smaller excess of liquidity of the bank.
Thank you. We have one, I would say, unusual question or specific about other operating income, and I'll probably handle that very quickly. The question is, other operating expenses to that 72 million, double year on year. What is included in that, and what is the guidance for future quarters? I mean, in this position, we chiefly book legal expenses, so I think this is the main reason, simply. There was also a handful of questions relating to our capital. First of all, there was specific questions about the impact of IFRS 9 on CET1. There was also questions in terms of our capital path for the rest of the year. Let's start with these.
So regarding the capital ratios during the quarter, just to, because I did not explain this in detail during the presentation, so in the quarter, of course, we knew that we were going to have the negative impact of the end of this transition period of treatment of the losses on the bond portfolio in the portfolio of holds to collect and sell, which on the 1st of January started to be treated with 100% impact instead of 60% impact before. However, this negative impact was significantly offset by the improvement of the valuation of this portfolio during this first quarter, and so this impact turned out to be much smaller. On the other side, we had the impact of this IFRS transition was, in terms of amount, because this is the question, was close to 90 million zlotys. Regarding the capital position of the bank and what we are for, let's say, planning for the next, for the remaining of the year. So we stick to the statement that we have done already in previous reports and meetings, which is we continue to manage actively the capital base of the bank in order to, through a combination of generation of organic results that later will be translated into the increase of own funds of the bank. Second, continuation of the optimization of risk-weighted assets, which includes this careful management of exposure, especially in the corporate area, but also the continuing to explore additional possibilities of securitization of assets. As we disclosed last year, in the report of last year we made 2 securitization transactions of SME loans, and this year we are planning to continue. The most likely portfolio to follow will be leasing, but this is still under preparation, so we cannot say yet when this will be concluded. But the plan is to continue to generate additional capital also by using this possibility of doing securitization transactions of the loan portfolio.
Thank you. And because you answered at the same time a couple of questions about our securitization plans and capital, which is actually forward. There was also a question about the path for capital, but you have answered that already.
Yeah, so our target is again to continue to improve the capital ratios and to further increase the surplus over the minimum regulatory requirements, and this is what we plan to continue to do throughout the year.
And while we are in capital-related subject, it's obviously questions about MREL. Are we plan to be compliant by end of the year? How would we get to the MREL target at the end of the year? And whether we plan to issue domestically, internationally, and so on and so forth.
As we also wrote in our reports, of course, we have the clear objective of fulfilling the MREL requirements until the end of this year. This is a combination of several factors. One is the level of MREL requirements by themselves, which we are expecting to be lower when we will receive the update of such requirements from the Banking Guarantee Fund. And this new update should reflect the lower Pillar 2 buffer, P2R, that was communicated by KNF in the end of 2022. We still did not receive this update, but this is the expectation that we have, that will decrease the interim and ultimate level of MREL to be fulfilled. The second contributing factor will be the improvement of the own funds of the bank, obviously, which will be hopefully done through the generation of positive results. And the third is the issuance of bonds, where we will be permanently assessing the market conditions in order to try to make one or more issues. This will depend exactly on what will be the ultimate amounts that will be needed. And we will be contemplating both domestic and international issuance, and the plan is to do such issue or issues until the year end.
There was a handful of questions relating to cost of risk. One was whether we confirm our earlier 60 to 70 basis points guidance. The other one is what is our expectation for the cost of risk for the full year, so it's pretty much the same question. There was also a question whether we, in which segments do we see cost of risk increasing, and whether we see increase of overdue loans in the retail segment.
So first of all, as I mentioned during the presentation, for now, the cost of risk is very close to the level that we guided in the previous meeting. So as it is visible on page 11. First quarter, 63 basis points over total loans, when we had guided for something between 60 to 70, so we are there. The second, in this quarter, the cost of risk was driven by retail loans, while corporate was at virtually zero. So we have three relevant portfolios in retail. One of them is not generating, let's say, cost of credit risk, is generating another type of risk, which is the FX mortgage. But we have the PLN mortgages and consumer loans. So let's say we have the combination of both in terms of the cost of risk of the quarter. As we had expressed already in previous meetings, the higher level of interest rates would always potentially imply some additional levels of delinquency and NPLs, which of course is gradually happening, but it's still within what we would expect. And so, according to the information that we have and that we see, and the data that we see, we do not see any reason to change this outlook regarding the cost of risk for the year 2022. So we stick to this range of 60 to 70 basis points over total loans.
There's a very interesting question from a gentleman named Marek, is why did Bank Millennium sell for almost $500 million its interest in insurance company, which is not true, and whether this was related to any liquidity problems at the bank. So I think it basically boils down to our reasons for the bank assurance transaction.
So maybe we can take the opportunity to, because there is other questions as well. So we were one of the bank that was still without exclusivity agreement in terms of insurance. The possibility of establishing this joint venture and making this transaction allows the bank to extract more value of this bank assurance that we have. Liquidity part is, of course, is irrelevant in terms of the gain. The capital gain, it's relevant for the bank, especially in this time of Swiss franc mortgage. There is a question about if we would do the extraordinary provisions without this capital gain. I would say that we join convenience with the moment. So it's not, we didn't do the provisions because of that, but it was a good opportunity that we were allowed with this capital gain to make this adjustment, because one way or another there was an opinion of the General Counsel of the European Court of Justice, and the opinion is negative for the banks, and so we are making these adjustments. It's clear that we had a very simplified methodology, let's call it like that. So it was the results of the court decisions that will translate in a probability, and the new court cases that we are having. As time goes by, we have more negative decisions on the bank sides, so it means that also the probability to lose is getting much higher. And we have more cases, so it means that also the volume of the present cases is bigger, but for us, with this decision and the good timing, of course, we made a first adjustment, preparing the bank to the possibility of a negative decision. That can happen up to summer, so we never can be sure, but we are pointing between June, July to have the decision of European Court of Justice. And the process of the decisions in considering invalid these long-term credits, and even stating that the usage of the capital is without any compensation, is being so surprising that today we could not forecast or predict any kind of decision. So we are preparing ourselves for the worst, and this is what we have been doing up to now. Of course, there is always this kind of questions. If the bank with a negative decision will have impact, of course there is always impact. So it's every time that we make provisions forecasting a negative situation, when a negative situation occurs, we need to do much less. But it's obvious that the materialization of a negative decision would require an adjustment of our model. There is two adjustments to be done. One is adjusting in the model of the probability of having remuneration, that today is becoming smaller and smaller. Another one is future cases, that we need to have also evidence of the changes of the behaviors, that for the time being it's still difficult to assess if there will be a change or not. But this is something that also needs to occur with the timing, because this is an area that it's very difficult to make immediately assessment since the beginning what is the level of provisions that we need to do for this legal risk. If we would do in the beginning of all of this saga, of course it would be a small percentage of the provisions that today the banks have. So it's I think it's the same way that we are not forecasting a dramatic movement. Also, it's difficult to say when it will stop, because it's a process of we need also to have a slowdown of cases, or from another side also to finish the cases that we have, or the life contracts that we have. So, or we are able to convert and early repay everything, or we will go to a minimal number, which is the customers that decide not to do anything and just to pay the installments that are of course very low due to the interest rates and even the maturity of the loan. But for this we need to wait. So we are not forecasting a dramatic increase, but also we are not forecasting a dramatic decrease of the effort of the provisioning for the legal risk of Swiss francs.
And also just to because there are some additional questions related to the same topic. So we still are not able to establish a connection between the opinion of the General Counsel of the European Court of Justice and the inflow of the court cases during the first quarter. The opinion was published on the 16th of February, and the dynamic of a court case is not compatible. So it's not possible that the person hears an opinion on 16th of February, puts a motion to the court on 17th of February. So in real life, it does not happen like this. So we are not making a link. It's true that we had a more inflow of court cases in this quarter than in previous quarters. It is not a record quarter as well. So we still will need to continue to track and to see if there is any change of behavior, which until now we cannot say that it happened.
And it's probably worth highlighting that the increase of court cases against us is a systemic thing, because other banks have seen exactly the same case and the same increase.
Yes, and also it's important to not give here a wrong I would say guidance, because if we are talking about a negative trend, a couple of hundreds, this would be a very positive scenario in terms of the decision. So it's also important, because sometimes people are very fast to take assessments, but also do not understand that we are talking about a couple of hundreds. So it's not a negative trend if of the opinion of the General Counsel, or even if of the decision, cannot be expected, or there is no trend, or if there is a trend, it's not going to be just a couple of hundreds. So it will be bigger, of course, across the time, but I think we need also to be prudent in terms of these give here a too mild assessment. So it's we need to be open to be prepared for the worst, and this is more or less what we are doing with this extra effort of provisioning.
There was actually a couple of questions relating to proportion, the number of cases from already repaid loans, whether we can quantify the impact or proportion of these.
We can say that the proportion has been relatively stable, and it's between 10 to 12% of the overall stock. Of the overall stock of court cases.
We can, unless you find other questions relating to FX mortgages that you want to answer, but I think they're more
No, I think there is also a question
same.
that somehow tries to I think it's a question about what is the level that we expect for the next quarters in terms of provision. I think it's more or less the sense of the question that I think I saw here. When we look at the graph on page 13, on the bottom right, we are showing the time series of the last 3 years, where in red you can see the quarterly P&L charge. And there is somehow some kind of range, right? Excluding this quarter, the first quarter, where we made this extraordinary provision. So, of course, we don't give any guidance for future quarters because actually, as it was already said, and as we wrote in our financial report today, the major driver is going to be the flow of the court cases and to which extent it matches or not our own expectations. So this is going to be a crucial element that we will need to be regularly assessing if there is any change of pattern in terms of the inflow of the court cases. But at least looking at this picture on the bottom right, you can see what has been done in previous quarters, and so it gives, it's not a forecast at all, but it shows that if there would be not a significant change in the drivers, then obviously there should be not a significant change in the outcome.
This probably needs to highlight, or requires highlighting, that we already have a very high probability of loss in our model. So
yes.
This parameter will not change at all. So.
Yes, exactly.
Okay, so moving aside from FX saga, there was a question about mortgage origination. According to the participants, the new volume dynamics in mortgages were relatively weaker than on the market, which I think is not true because we maintain market share. And was it a consequence of the way we report the results, or was it a consequence of a different approach or policy to PLN mortgages?
We are maintaining the market share. The mortgage market in Poland is very, very weak, and our forecast is that it's going to stay extremely weak until we have a bigger legal assurance in how robust is to make a long-term contract or a long-term credit contract, let's say like that, in Poland.
Do we plan to take part in the 2% mortgage subsidy program?
Our position is that we are studying it and analyzing, but the probability of take part is very low.
And there was a bit of a cross-checking question. Whether we have any comments on the envisaged exit from the capital protection plan and recovery plan?
So thank you for this question, because in fact we did not mention this. So we have been executing thoroughly the plans. We have been implementing everything that we had somehow included in those plans that were submitted to regulators. In fact, the actual results are better than our original estimates. Regarding the recovery, so regarding the exit of the recovery plan, because I think the question is more about the potential exit of the recovery plan. This is a process. So we already are above the minimum regulatory capital ratios already for the second consecutive quarter, still comfortably above, as we showed here on the presentation. Of course, we want to ensure that this is going to be sustainable and resilient. So this is point number one. And point number two, that also additionally we will be taking the steps to fulfill the MREL requirements. So these are two things to be continuing to be done in 2023. So we do not have any guidance regarding the exact moment of exiting the recovery plan. What is for us crucial is to demonstrate the capacity of the bank to generate organic results, organic capital, and to increase the safety buffers over the minimum regulatory requirements.
Fernando, do you see any questions that we omitted, or I think we largely answered all of them. So thank you very much for your questions. In case we haven't answered any of them, or we haven't answered them fully, obviously you're more than welcome to approach us and ask us for more detailed explanation. João, any closing remarks that would like to share with the audience? We became a boring bank, right? I mean,
yes. No, we are, is a little bit what Fernando said. So we are executing in a very disciplined way our capital protection and capital recovery plan. This is with the securitizations, with the transactions that you saw. Of course, with the intention to issue MREL also to fulfill our requirements, and also, and this is very important, through having a solid business model that allow us to have the profitability to generate capital in an organic way. This is what we are doing. At the same time, we are completely focused in our strategy. So we have been being very focused in customer acquisition. That was visible in terms of number of customers. As you know, we track just, and we are just interested in customers that bank in a regular way with us, so they are active customers. And with the digitalization, so we have this vision about having 3 million customers that up to summer, I don't know what summer means, if it is August or if it is July, for sure it's not September, we'll reach the 3 million customers. These 3 million customers was a target that we had for the end of 2024. We will also reach the digitalization levels that we wanted, which is also extremely important to have the efficiency and levels that we want to be a bank to serve these 3 million customers. In the corporate side, it's a pity that we do not have the capital to make growths in market share that we could do at the moment. But it is what it is. So we are using more guarantees. We are trying to make the lending in a process that consumes less capital, and also oblige all of our sales teams to focus more in SME and to forget big transactions where we would need to allocate a lot of capital and the profitability would not be so good. Also in corporate, we are going through digitalization. This is also always things that are more difficult for our analysts to see, because a lot of our analysts are also our customers, so they witness the digital capabilities as a customers in their apps, in their products that they use. In corporate, it's more difficult unless they have a parallel business to see what we are doing. But the numbers are extremely good in terms of usage of the digital means, which in leasing means EBOC, of our leasing customers, the usage of the internet platforms for our corporate customers in terms of analysis, exchange of documents, everything. And now we are also, after this Mayufka, we already trained the network, we already made the test and everything. We will have a very important launch of our mobile app for corporate that also we believe that will be distinctive in terms of our corporate offer. And so we are very positive for the business side, and we also believe that this business part will be crucial also for the capital protection plan. And the capital protection plan we already are done, but it's a question of finishing all the cycle. But on the recovery plan, let's call it like that, to address all the challenges that we still have. And also we need to hope that that the authorities will not put additional challenges up to the summer. You never know, but I think the banking industry in Poland already have challenges enough to make our role, which is financing the Polish economy and helping the prosperity of the Polish people.
Thank you very much, João. Thank you very much, gentlemen. Thank you, all the viewers and participants. Thank you for your time, your interest in Bank Millennium. To remind, our next data point is 27th of July, when we report first half results. Have a long weekend, good long weekend, and enjoy whatever amount of sun and good weather you can get. Thank you very much.